Now, in addition to Chairman Powell's comments, there was even more Fed speak today about what the president's economic policy might mean for the Fed's monetary policy. Steve Liesman is in Chicago with more tonight.
Two top Fed officials speaking in Chicago today suggesting that coming new tariffs from the Trump administration could change monetary policy. Here's what Fed Vice Chair Richard Clarida told CNBC in an interview.
To date, the tariffs that have been put in place on the economy have had a small effect in the aggregate, and I think the others would agree with that consensus. As we move ahead and we consider potentially more tariffs and potentially retaliation, that potentially has a more noticeable effect on the economy, and we would have to take that into account.
Clarida said tariffs are not necessarily inflationary because prices only go up once and stay that way. So he said he's more inclined to address how tariffs can weaken growth. Fed Chairman Jerome Powell also said the Fed would act if it needs to.
We do not know how or when these issues will be resolved. We are closely monitoring the implications of these developments for the U.S. economic outlook, and, as always, we will act as appropriate to sustain the expansion with a strong labor market and inflation near our symmetric 2% objective.
Markets thought this was all potentially good news. Not only did stocks rally sharply, but the chances of a Fed rate cut in July shot up above 60%. Some traders even took a flyer on a possible June rate cut. Well, that seems early, but the idea that the Fed is headed for at least one rate cut as a result of tariffs looks like a good bet after these Fed officials spoke. For Nightly Business Report, I'm Steve Liesman in Chicago.